In the recent times, you must have heard in news that this XYZ person got his grandfather's shares in which his grandfather had invested in the past. Those shares are now worth of crores or lakhs. You must have also seen in news that market has rise today or market is down today or so and so company's IPO is coming. XYZ company shares have crashed. So, what are all these words and why we as beginners who are thinking to start investment or trading in the stock market should know all these things before we enter the stock market? In this video, we will cover the basics like what is stock market, what are shares, what are IPOs, and what is the benefit for us by investing in stock market. We are going to discuss everything in this video. If you are a student or a working person or you have some savings and want to invest it so you can gain some extra money, this video is completely for you. Don't miss this video filled with full of knowledge and do watch the video till the end. So let's begin. What is stock market? Stock market is a platform where many companies are listed in the form of shares. The stock market works through a network of buyers and sellers. Every time we buy and sell stocks, we use these networks. You must have seen that every stock has a different price that is decided by the amount of people interested in that stock. If we buy the stock, the price goes up. If we sell the stock, the price goes down. There are many exchanges in India in which the two main exchanges are National Stock Exchange, which is also known as NSE, and another one is Bombay Stock Exchange, which is also known as BSE. An interesting fact about BSE is that it is the oldest stock exchange not only in India but also the oldest exchange in Asia. It was established in 1875. There are two major indices in Indian stock market. One is Sensex and another one is Nifty. Now, what are indices? Indices are a statistical measures that track the performance of a specific group of assets like stocks, bonds, etc. For example, Nifty 50 is a group of 50 Indian top companies. Similarly, Sensex is a group of 30 top Indian companies. Now, to monitor this group of companies, we need a tool. That tool is called as indices. These indices help us in tracking the progress and performance of the companies. Why stock market is important? Let's assume that you have started your own company and now your company has been performing very well. So now you need some money to expand your company or introduce new products in your company. You have two options. One is you can borrow money from the investors. For that, you must convince the investor first so that he can believe in you and your company and even your vision. Or you can list your company through an IPO in stock market. Now, what is IPO? IPO is also called as initial public offering. This is a process through which private companies list their shares in the stock market. For example, you want to raise 10 crore for your company. You list 1 crore shares at the value of 10 rupees per share. With this, your company will get the amount and your investment requirement will also be fulfilled. Now, your company has got investment from its investors. Now, what will their investors get in return? Your investors will get shares of that company. This share will also make you a part-time owner of the company. For example, if you have 5% shares of the company, then you are 5% owner of that company. Why should I invest in stock market? There is a very beautiful quote by Warren Buffett himself. If you don't find a way to make money while you sleep, then you will have to work until you die. This simply means only relying on salary will not make you financially stable. You need to find a way from where your money grows and gives you some extra returns. When I say extra returns, most of you will think about fixed deposits. But to be honest, fixed deposit will give you only 5 to 6% of returns as inflation rate is 3 to 4%. But if you invest in stock market, you can gain up to 10 to 12% returns, which is a good growth of your money. And if you are confused what inflation is, I have already told about inflation in most of my videos. I'll explain it in short this time. Inflation is the growth of price over time. For example, you took a home at 30 lakhs. Now, after 10 years, the same home will cost you 60 lakhs. This difference of amount is called as inflation. Apart from this, investing will teach you how to manage your money. You will gain good knowledge about companies and their work. You will become financially smart. Money is a very powerful tool. When you invest it wisely, your money grows faster with the help of compounding. Albert Einstein called compounding the eighth wonder of the world. How many ways can you invest in stock market? There are number of ways you can earn through stock market like capital gains, dividends, IPO listing gains, trading, long-term investing, mutual funds, futures and options, dividend reinvestment plan or DRIP, index investing or ETFs, stock buybacks, arbitrage trading, security lending and borrowing scheme, which is also called as SLBM. I have just told the ways you can earn through stock market, but if you want a detailed video on this topic, do let me know in the comment section. I will cover this next time as this video will be long. In short, there are two types of people in stock market. One are investors and other are traders. For beginners, I would highly suggest you to start investing very small amount, like you can invest in index funds like Nifty 50, or you can buy blue chip stocks on which you can trust or you are confident about. Blue chip stocks are stocks of well established companies like Infosys, TCS, Reliance, Nestle and many other stocks. The most common mistake I see people doing in investing is in penny stocks. Don't listen to people saying buy this stock, it will double in 5 months. Avoid these stocks and avoid such people as well. Even I had made the same mistake in my early days when I started investing. Start low, gain knowledge so that you will know how the market works. Then later you can decide which type of investment suits you. Where to buy shares to start investing? To start investing in stocks, you need to have a demat account first or a trading account. Nowadays, there are many brokers that offer zero account opening fee like Zerodha, Upstocks, Angel One, Grow, and there are many of the brokers which are in the market. You can choose whichever broker is suitable for you and open your account. After that, get your KYC completed. And after your KYC is completed, you are ready to start your investment journey in the stock market. At the start of your investment journey, don't invest too much amount. First, use your time in learning how you can find good stocks. If you want, I will make a dedicated video on how I find good stocks. If you want a video on that, do comment down below. See, investing is an art of patience. People who learn it slowly will definitely make their portfolios a Picasso of stocks. So that's it for today's video, guys. Hope you like the video and thank you so much for your time and thank you for watching my video till the end. I will meet you with another interesting topic. Till then, take care. Goodbye.